All right, hey traders, TG Watkins here. It's February 14th. Happy Valentine's Day. Hope everybody's going to be having a good time with that, or Singles Awareness Day, as we would joke whenever we were single. So yeah, hope everyone's going to be having a good time out there. If not, treat yourself. Go out with some friends, something like that. Let's see if I can pull. I'm not sure if I can pull a camera or webcam from both. So we live over on YouTube and Facebook and I believe X. Yeah, we should have those three places. And then it looks like we're good in the Moxie room. Okay. Also, as we have President's Day coming up, we've got our President's Day sale going on. So 30% off most things. If you guys are interested, come check that out. And then we are going to be in Vegas next week for the Money Show, the Traders Expo. This is actually where I met John Carter years ago, and that's how we started our business relationship here. So we're also going to be hosting a poker night that Thursday night. So I get in Wednesday night, so Thursday night, I think it starts at 7. Well, there's probably more information there, but yeah, I think it starts at 7. Yeah, 7 o'clock, and it's going to be at the Bellagio. So good times. And then we'll kind of do that. We'll see how quickly I can get knocked out. They put Chris Brecher up front. He won the tournament last time that we were in Florida. And then Trendy John, I think he came in second or something like that. So we got some pretty solid players here who know what they're doing. I'll have to see what kind of what I can learn from them. So yeah, make sure you guys check that all out. All right, so let's kind of dive into things. Let's look at the market. Oh, here we go. Yeah, I was asking yesterday, because CPI came out. So brighter side, I see it asking about CPI. And yeah, it came in a tick higher. And so, the market was expecting it to keep coming down. And the fact that it's not going down or maybe even going up a little bit has the market, not spooked, but basically they know that the Fed is not going to cut rates anytime soon if inflation is still kind of doing this thing, which honestly might be okay because we don't want inflation to be coming back. And so just to make sure things are good and squashed or really going that direction, I think is good. And I think, the market has just basically been jumping at the idea of interest rates being cut. So, okay, that's what the market wants. But we'll have to see how that works with the economy and everything. And I think the market's still trading off of the idea that rate cuts are going to happen eventually, just kind of a question of when. And so with that little bit of a CPI bump, I was like, hey, is inflation coming back, or are we really just kind of in sideways chop? I kind of lean more towards the idea that inflation is sideways because we're stock traders, we see the trends, and we also see that sometimes trends just go sideways. And I'm kind of leaning more towards that's what's happening with inflation. But yeah, we had a fair number of people thinking that inflation is coming back. So we're gonna have to see. We'll have to see how that actually pans out and everything. Now, as far as the market goes, and yeah, again, Nick, you're talking about the breadth here. We have been seeing bad breadth, right? Deteriorating breadth, and so yeah, what we're looking at is the number of stocks over their 20-day, 50-day, 200-day. They just haven't been looking awesome. They've kind of been, the 20 days been oscillating a little bit. You can see here, right in there. We did get a bump up, so we've had a number of stocks kind of recover and come back, but it's mostly just kind of been sideways at this point. So we could say, hey, we've got a number of stocks that are coasting, they're doing well, they're staying in uptrends. This hasn't really started falling apart yet, and it is at an upper level, but it's just not awesome. Like this is when we're going up, that's great. This is kind of like so-so, and we need to see if this is actually going to start going a little bit further down and how that looks. The one that's mostly concerning to me is the 50-day. This is the thing that's kind of telling me that the overall participation of the market is not great. It keeps getting less and less and less. So this means fewer stocks are going up and more stocks are actually breaking down below their 50-day SMA. The 200-day has been mostly holding up. It's obviously got too much back here at like 80%. It's just too many things are going up, and so maybe we can kind of get this to burn off a little bit, and then we'll see if it comes back. And the 50-day, we'll have to see this thing come back down and see when it wants to come back up, and that's kind of what we're looking for and waiting for. Now, the other thing that we can be talking about is the put call ratio, and the put call ratio has been, I mean, let me change my color. There we go. Has been low, and that kind of was an area where the market looked like it might have wanted to pull back, but instead it just went sideways. And so we went up even further and we reversed course. So we got the put call ratio coming back, but we're back down here again. And the put call ratio is usually pretty good. Looking at this and saying, well, that tends to be where the high of the market is when the put call ratio gets low. So we just need to, things are kind of looking a little wonky out there because put call is low, the breadth is not great. And then if we look at, let's come over here, look at the S&P exactly, we went up there and we definitely hit 5,000, went a little bit over. Okay. But if you look at this, I've drawn a couple lines. We've got this kind of linear regression type channel. We are right up there. And this has been a very, very bullish thing. I mean, we've been going up for 3.5 months, basically. And I think it was kind of, going to happen because, well, we're so close to 5,000, it was just going to act like a magnet. And we got that. But now we're up here. And what's the market going to do? And, we have continued to see, fair enough amount of strength out there. I mean, we got some pretty crazy stocks that are popping off. But at some point things are going to get a little too much and we'll see a cycle down. Now the question just is when is that going to happen and what's it going to look like? Those are always the questions. But you can see here, even on the weekly chart, we're starting to get pretty extended. Even in 2020, we didn't really get that far outside of the weekly third ATR. You can kind of see here we got there and look what happened. Granted, that was COVID. We touched it right there. We touched it right there. And then really we not until there. And each time we did see the market pull back to about the weekly 21, roughly. And you can see here that we also have not pulled back to the weekly 21 in quite some time, 3.5 months. So the market's kind of due for it. Nick, I see you're kind of saying the same thing. That's what we're looking for. But I don't want to fight the long side. I'm not going to try and short anything because, well, the market's been super strong and everything. And honestly, if the market does want to cool off, it doesn't have to go down. We've talked about this before where, we kind of looked at this and said, be careful trying to short something because, let me see if I can get over here. I think we were brighter side. We were kind of talking about it. Gosh, was it here or here? One of those we were talking about where you were looking to short the market, and it was basically a 1-day short, and then it went right back up. So this is kind of the challenge with trying to short something that's overbought, is it can stay overbought for a while, and or it can do a quick pullback just to cure its overbought thing and then go right back up. So that's kind of what we need to be careful about with trying to short something. The other thing that we can kind of look at is if you squint and look past these lines, you can see that the market was overbought here because it had basically jumped off those moving averages, just like it had done here, and even here, and even here. You can see that the price had pulled away from the moving averages, so we got a pullback. So really now the question is, what is this going to do? The other thing I see here on the hourly chart is we've got some negative divergence showing up. So you can see price has been going higher, but notice that the Moxie indicator, you could say made a lower high, basically a double top through here. So that is a form of negative divergence. And today we're getting the Moxie price trigger to the downside. That doesn't necessarily mean short it. It doesn't mean like get out of everything, but it is something to be aware of, that the market itself, the S&P, is saying, hey, I probably need more of a breather in through here. Initially, yesterday with that CPI number, we came down, we tagged the daily 21. And from there, sure, we can bounce, but now we need to see if we're going to start running into some resistance. We need to now kind of be careful, play a little bit more defense and see where this market wants to go since we've started pulling back. And I'm kind of curious, like, I do think eventually we're going to start heading towards the daily 50. And the reason I say that is just also because we haven't touched the daily 50 since this thing started moving up. The markets tend to like to touch their daily 50s, not infrequently. And so, just look at the past and see how many times. The most recent one that I can show you here, let me just switch back over to a cleaner thing, was right here. There's a pretty big gap between price and the daily 50, and well, look what we got. And same thing here. The market is very far from its daily 50, or at least hasn't touched its daily 50 in quite some time. So that's another concern. That being said, though, I have to balance this with the IWM. The IWM was and kind of still is looking pretty good. I've been saying that number one, I think that this is going to be the canary in the coal mine. So if the market is going to pull back, we will see it here. But if the market's going to keep going up, we will also see it here. And that's why we had a pretty good run over the last, Thursday, Friday, and then Monday. And we broke that trend line, and now we are right back at that trend line. So I'm kind of curious to see how this goes. because maybe it just needs a little bit more chop. Don't know. But if this starts to break this trend line and move back down, then yeah, it needs more time and more help, and maybe it needs to pull back again, and we'll have to see where it goes. But overall, the IWM is looking pretty good. We'll just have to see if that actually can hold up. And I'm not saying that the IWM is going to lead the market, but it's going to be the canary in the coal mine. It's going to be the most sensitive. So we'll see if it works or doesn't work. All right, so we got that. And then, with the whole CPI situation and the Fed and all that, the TNX has been moving up. The market does not like this. The market is inversely related to the TNX. So basically, if the TNX goes up, the market doesn't like that. The market wants to go down. If the TNX go down, then the market loves to go up. And right now, you can see we had FOMC where it basically came in, double bottomed, and then moved back up. And for now, yeah, TNX is moving up. Market does not like that. So we need to be careful about that. And then same thing with the dollar. The market generally likes a weaker dollar or a dollar that's going down, but in this case, the dollar has mostly been going sideways. Yes, it's been going up over the last few days, couple weeks, something like that. And so that might be kind of putting some pressure, but I don't think the market is too concerned about the dollar overall. It's really mostly concerned about the TNX, and I would say that's probably because the dollar has been going sideways for the most part. So the correlation there hasn't been super strong as of late. All right, so yeah, brighter side, looks like we're kind of on the same page for a lot of these things. You're wondering if the start of the market refresh for the Dixie, the dollar here, the only thing I can kind of say is it has tapped the daily 50, and that the hourly 50 has crossed over the hourly 200. So that's kind of the only thing I can point out. The only other thing maybe is prices up, Moxie indicator down. At some point, this might take another little pullback, but yeah, what am I supposed to do with that? It's the dollar. I'm not really trading it. I'm just kind of using it for references. So beyond that, amazingly, NVIDIA and SMCI continue to be strong. This is absolutely bonkers how well these things are doing. And I don't know what to say, where they're going to go, how long they're going to stay up. All we can do is continue to follow them and see if they continue to stay above their moving averages. And so far, NVIDIA, okay, it's doing it. I am noticing well, let me see, draw that better. I'm noticing negative divergence, but it's not exhausted yet, and it's still in an uptrend. SMCI, I think it even had another pop today, which is just crazy. And yeah, we will just have to see how long this thing wants to go. Follow the moving averages, basically. And then we have ARM, and we're in this one. I think it looks good, but it's consolidating. So we're gonna have to see if this is maybe now where it's gonna flag sideways and waiting for the hourly 50 to come up to it, something like that. So ARM is looking good, and also looking at net, kind of looking for the same thing, gonna see when this thing finds some support, and it might end up being right around there as price kind of comes in, finds its equilibrium, and then maybe starts to go up if it can find some support. A little too early to know that yet, but that's something I'm watching. And then the cryptos are doing absolutely fantastic. So we can look at GBTC as kind of the Bitcoin ETF proxy. I mean, wow, doesn't that look good? Very, very good. And that was after a very nice bounce off of the daily 50. And you know what? There's your Moxie price trigger again, like a fresh signal right on cue for Bitcoin itself. I mean, absolutely perfect as far as that Moxie indicator right there. And then we've been in Mara, and this thing keeps going up. I kind of was expecting a little bit more of a pullback from yesterday, but I guess not. So happy to be in. That pulled back to basically the hourly 21 and then continued to move up. At some point, I'm sure there's going to be a more significant pullback. I was kind of looking for, or forward, I was looking forward to a little bit deeper of a pullback, something I could, maybe rely on a little bit more, something like that, something like that to cool it off a little bit. But no, it wanted to keep going. So be prepared. Pullbacks at any point, they could be substantial, but I would only be a buyer for Bitcoin miners, anything else like that, because these names are just doing great. Some of them are doing better than others. Mara and CLSK are doing pretty well. And through here, like great. But then you have BTDR. This is one that I've kind of been watching. doesn't look bad at all, and these things can move, even a double. I mean, you could easily see this thing coming up and doubling, sure, but compared to the others, it's just not doing quite as well. Hive is it's doing okay. Yeah, it's just it's going, and it could definitely double as well. I mean, you think about where it is, it's 3.5, and you come up here and, it could do that too. But if this is gonna double, then the others could be tripling or quadrupling, maybe, if that's what they wanna do. So they are moving, they are doing well, but some of them are doing better than others. So yeah, brighter side, that's why I switched from Hive to Mara because, well, go with the leaders, and we had the opportunity to get in. So in the past, I was trading Hive because it hadn't taken off yet compared to Mara. But now that we've had the more major pullback of, buy the rumor, sell the news, when the ETFs came out, we now had a fresh opportunity to get in on Mara. So we did, and that's paying off nicely because let's see, we are up roughly, yeah, 38% in just a couple of days. So very, very nice trades for us on there with the with Bitcoin and stuff. Coin, you can look at that one as well. They're moving, they're moving and grooving. Yeah, got earnings coming up. We'll see how that works out. So yeah, there you go, Bitcoin kind of stuff. And then let's take a look at Snap since you're asking about that one. Now I've the All In podcast. Maybe you guys have heard about it. I like them. I listen to them every time they come out on I think it's a Friday, maybe Thursday, but probably a Friday that they have their video. They do YouTube and also their podcast. And they were talking about Snap. They were talking about the difference between Meta and Snapchat as far as how the CEO operates and how their finances are, and like why did Snapchat get crunched on earnings when Meta went through the roof on earnings? And from what I remember and what I understand, they were saying like, look, Snapchat is paying their employees with stock options, with stocks, and they give them a lot, compared to how much free cash flow that Snapchat is actually doing. And so there's an imbalance there, and they're not being conservative. They're not bringing things in. They're just still like a lot of money is just flying out of Snapchat. Whereas Meta and Zuckerberg, he's like, oh, okay, I got the message, and he like cut 20% of their staff. They were buying back shares. They were keeping the stock price up. They were reining things in, and they were doing everything they needed in order to make sure the company stayed afloat, did well, brought their numbers back in, and had strong performance. Whereas Snapchat is not. They haven't really tightened things up and figured things out. They're still just blowing a lot of money and not being good with their numbers. And so that is why Snapchat is doing what it's doing, and that's why Meta is doing what it's doing. So yeah, Nick, I wouldn't be trading Snapchat. I mean, just there's no need to be in something like this. I just wouldn't be around it. Yes, it had kind of a good move, got overbought, and yes, it's back down to where it was. So if you really are interested, you're gonna have to wait for all this to turn and then to start back up again. But based on what the guys over at the All In podcast said, this company is not being well run compared to something like Meta, honestly. So yeah, go find better companies that are doing better, and that should help your portfolio. All right, guys, so I'm going to leave it there. Just remember, we are running a President's Day sale. It's going to be USA 24 as far as the code, 30% on most things out there. And then we are going to be in Las Vegas for the Traders Expo. So if you guys are interested, we're going to be there. Come check it out. Come say hi. I've got a class with John Carter, and then we also have a board panel thing on Friday afternoon. And then we're going to be hanging around. We got a booth out there, and then we're going to be doing a poker tournament Thursday night at 7. So yeah, come check it out. We'll see how quickly I can lose my $50 or something at poker. All right, guys, thanks again, and we'll